Hello everyone, welcome to Fearfully Greedy. In today's video I will tell you I bought something new, which is Pinduoduo. It's a bit late. If you see, it's been 40 days almost that I bought the idea. This video should have been done almost a month ago. I had it prepared, but well, such is life, okay? Sue me. It's free content on YouTube, so don't expect too much. Also, I will just cover maybe the main points why I bought it. The idea of the channel is really to share my portfolio, but not to be an analyst in any case. Like sometimes if I'm not bringing any new ideas, why share them? There's a lot of good analysts on YouTube anyway. So bit of housekeeping, the portfolio sits at 156,000 euros, almost 157. Almost a 97,000 euro gain, 161% up, money weighted return 27.3% annual return rate, and if we compare it to the indexes, I'm up 40 or 50%, depends on what index you are comparing. Okay, since the last video I sold a position which funded the new purchase. So I sold on the 20th of May. I sold Alibaba, and with the same money pretty much I bought Pinduoduo, okay? And that's it. It's been 2,200 days. It's the 5th year that we do this, and I put 60,000 euros in this portfolio, and I've been sharing it live in this Google Sheet, which you can take a look 24 hours a day. It's publicly shared. Usually the next day after I buy something, I just complete this Excel, okay? If down here there's the research, which is also public. Let's go there and let's talk why I bought Pinduoduo. As you know, there's all of these I take a look. Some of them I don't include, but most of them I do. And the ticker, logo, sector, if it's investable or not, and why, if it has moats, how powerful are the moats, the trajectory of the business, not just revenues, but if the business is growing or not, if it will exist in 30 years, and then back of the envelope valuation. Then in these documents and Word documents that I have and folders, I do more research, but this is what I can share. Kind of visual, easy to do. As I prefer you to do your own research, because I think that's the best way to develop knowledge. And I'm not your financial advisor, so this just for entertainment purposes. Okay, let's take a look why I bought Pinduoduo in 2026. Mainly, there's 4 things that I see maybe slightly bit different. One would be the market share development. I think Pinduoduo can be quite special. That idea was brought to me maybe a few years ago when Lilu bought the stock. It was just a very tiny position. They just bought again. Now it's 15% of his portfolio or 20%. Norbert Lo also bought 15 or 20% of his portfolio. So I took a look again, and it just doesn't make sense to me. So it's pretty symmetric. The market share, okay. If we see what Pinduoduo has done in domestic e-commerce in China, it's in the last 10 years, it has taken half the market share from Alibaba, which is crazy with such powerful forces that they have. They have overcome in the last months, it has overcome GD even. And yes, there's Douyin, TikTok Shop coming back behind, but it's still very early days, and we don't know if this can really scale, while Pinduoduo kind of is still growing, okay? Then big criticize of the stock has been that this market share has been just bought, like just subsidized by the company, putting a lot of money into the market and losing cash. If we take a free cash flow margin in there, they are the biggest dog out there, and not just by margin, okay, they are also making so much money. So think about Pinduoduo more like a cash cow than another thing. Okay, Temu. Let's talk about Temu, because Temu is a big topic, and maybe most of the bad press here is here. They launched in September 2022, pouring around 8 to 9 billion, investing, let's say, just subsidizing these orders internationally with their usual model, which is consumer to manufacturer, but now from China to the world, okay? They have been the first time that Chinese giant has been able to expand abroad. In 2024, it was already 20-25% of international e-commerce. Take these numbers as said. I'm not charging you anything, so I just look at outlets, I look at other companies. Most of these companies don't share segments, or they are pretty black boxes. It's hard to know exactly. But they became the biggest downloaded app in over 20 countries in 2 years. That's sort of crazy. And yes, maybe at the start they were losing money. Are they losing money today? Well, I think the gross margin sure went down. I said we don't know exactly because the segment reporting, they don't do that. But if we take out operating margin, the margin has been pretty stable. The revenues have kept going up, and the real profit has still keep going up. So I don't think it's been a negative for the business. And if you grab the manufacturer, the provider, Temo has given them a wider market where they can make more of their items, and Pinduoduo just finds a way to make that economy work, which is super huge number, social buying and those kind of initiatives just to drive volume, and they have been very, very, very successful at that. Of course, the thing I see different is that now there's been these loopholes for low price items in US, in Europe, less than $800 now. Maybe we are paying 24 to 30% like tariff rate. That's since summer last year. In Europe, we don't know. Like, we know the new rules, the new law, but it's this month. Last month. Okay, and now 2-3 euros per parcel. We will see what that happens. If you are still buying on those platforms, you will see that you are getting you are paying the taxes at the end when you're buying on the platforms, which just increases the price. Maybe depends how many items. If you buy multiple items, so it depends a lot, but it's making it more expensive from 10% to 50%, depends on how you purchase these items. In the end, all these rules is just, as usual, the politicians just making these feel-good laws that we think it's improving local commerce and making the playful even for everyone. But these items were always done in China, these low-price items, and they will still be done in China because it's where they are made. We cannot make them in the West with local wages, but not that they don't get paid in China. Like, China is their GDP per capita is growing a lot. It's just that they have the manufacturing capacity, and they have been doing it for so long that we will not just now start making like these $1 items in the West. It won't happen. So these items get more expensive, but it's the local customer in the West that is paying for that to the local government. So we're just getting more taxed, but these companies will not sell less. That's my take. Maybe your take is different, but as it, they still have no competition in the end. Okay, they are pivoting to in-house managed products. That's kind of making their own Amazon essentials in some way. They are doing these big investments. They are trying to bring these quality improvements. This has been a big criticized of Temo and Pinduoduo, that their items were low quality. So what they are trying to do is change that and invest in logistics, quality, direct relationship with the manufacturers. Across the next 3 years, they plan to invest 100 billion RMB, which generating some local IPs, but the co-creation with the manufacturers, setting the standards and making these items pop up in the e-commerce, which I think this is a big call option that if it works, they have already a customer at the end. So if it works without killing the cash cow, that can bring a lot of profits also in the future. We'll have to keep an eye on and see where all this money, what it really generates. The next one is mostly like valuation. I said this would be the market trend development, the way I see it, that it's not a melting ice cube, that it's not being just subsidized. The Temu thing, that I just think this will just keep going, it's slightly more expensive. Now the pivot to in-house, I think it's a good call option, that I think it makes a lot of sense. And the final is just the valuation doesn't make a lot of sense in the end. If you see revenues, it's been growing at a super steady clip. If we take the last quarter, it's still over 10% growth, four times enterprise value to EBITDA. That just doesn't make sense. That just doesn't exist anywhere else. It's a fortress. Net debt, $62 billion in the bank, just waiting there. Return on equity on invested capital, super high. Try to find these margins in another e-commerce anywhere in the world. You just will not. For 58 billion, it made no sense. I bought at 75, so it's been already quite at 75, 79. If you see, I bought 4,655 euros. as you see the video, should have been done not a month ago, but almost. And today it's at $91.60, okay? And it's been almost 20% up in 39 days. Okay, that's pretty much it. I hope to do this more regularly. It took a while because I was doing like the usual thing that I always do, like trying to do script, making a better video when I should just start recording the screen, start recording the mic, and using the platform I created for free here and just talking over it with my points. I think it's as entertainment, and since it's I hope that makes me be able to make more videos. I hope to have an idea soon, another one, to move a bit of the other cash that I have into the portfolio. Okay, well, everyone be safe, take care. Thank you for watching. If you like it, please subscribe, like the video, share it if you think it's interesting. Okay, take care, bye-bye.